Hey everybody, welcome back to another webinar. So obviously we're going to be going over my watch list. For those of you guys that trade Forex, we'll go over gold and GJ, and then we'll go over the indices. So starting off with GJ's actually been a little bit choppy over these last few days inside of this consolidation range. On the daily time frame, we've actually seen a pullback on GJ to our previous market structure lows, our previous area of resistance, and we actually have support in this range, and the support range is still holding as resistance. So with this rejection towards the upside, we can definitely expect price to continue to go down from this area. Hold on, give me 1 second.
Once a credit card info is leaked, time is running out. And passwords. Yardio monitors data leaks in real time so you can take actions to protect yourself. Want to know who has your data? Go to Yardio.
My bad, I had to make sure my dog was all right. Anyways, so like I was saying, price has actually pulled back on the daily time frame to our
Raul, we can't look at your chart.
You can't? Okay, my bad. So, like I was saying, prices pulled back to our previous area here on the daily time frame where we've already rejected the upside. Now, there's been a lot of consolidation around this range, so I would continue to trade this range with caution for those of you that are trading this range. But the fact that price actually closed under this structure level is a pretty good sign for price to continue to go and roll over to the downside. Now, I'm actually going to modify this a little bit just to make things a little bit cleaner and simpler, right? This is kind of the area that I'm looking at GJ to maintain under. As long as GJ can maintain under this entire structure zone, then we can continue to expect GJ to roll over and go to the downside and start going bearish. Now, obviously, there's a lot of consolidation in this range. So like I said, again, I would continue to trade this area with caution. But I definitely do see GJ continuing to go down, especially as long as price can maintain under the range. I mean, even looking at this kind of Asian session candlestick here, we're already rejecting the highs around this area here. So there's a pretty good median around this range. But like I said, again, if GJ can reject this area, then we can look for GJ to come back down into the lows at around 163,500, then potentially 163 flat. Anything above this area, we could probably expect GJ to come back up into 166. 900, 167 around that area. Now, gold from the last time we spoke actually did come down into the lows quite nicely and give us a nice rejection, and price literally went all the way to where we expected it to go to if gold were to have rejected that area, which it did, to be 1722 or possibly even 1773. These highs over here has actually made new highs. Now, this structure is actually getting tighter and tighter. As you can see, there's starting to be a lot more consolidation within this range. So we can actually still expect a pullback to this area on the daily time frame where we could then look for that daily rejection and then expect price to go up and continue to make new highs as normal market structure normally would. Kind of the same thing that happened over here. We had price initially break above, pull back, retest, and then continue to go higher before coming back down, retesting again on the daily time frame and then going higher from there. So I would keep the overall concept roughly the same as to where we can expect price to actually pull back into the range, reject, and then look for price to come up into these 1780 highs. Anything under this area here, then we can kind of see gold come back down into the 1734 area here. Now, with US 30, so there's been a lot of consolidation around this weekly range. This is why I like to have this weekly range marked up, because on the weekly time frame, obviously we have this resistance range where price did reject a few months ago, kind of in August, and then we saw price completely go bearish from there. So this week so far, or last week, rejected this same area, and this week so far, as you can see, prices tried pushing above this range, but sellers keep coming back into the market around this area, and so far we're starting to see a rejection. Now, ultimately, prices pulled back to this area right here, this daily support zone. So let's go to the daily time frame. And we've actually seen price already reject this range. I'm actually going to lower this a little bit. We've actually already seen price reject this range with the previous daily candlestick. So price is still trading inside of this consolidation range. Obviously, every time price comes up into this weekly range, we want to pay attention for shorts. And then possibly, we could look for longs from this daily area here too. Now, realistically, what I would do kind of going into the next market session here is we already have an established low here on this 30-minute time frame. So at this point in time, it's kind of like, okay, well, let's wait and see what happens around these highs over here and possibly these highs over here, right? If price can come back into this range rejected, then obviously we could continue to look for shorts. Now, what we can also wait for, if you want a little bit more confirmation for the shorts, is to wait for a break of the lows here, a retest, and then look for price to continue to go down after that. Definitely, if price breaks these lows, we can definitely expect price to come all the way back down to like this 33,000 area. That's where I would expect price to actually come down to. Because right now, price is still in a consolidation range, so I'm going to continue to treat it like if it's in a consolidation range. It does seem like pretty much session after session, price is rejecting the highs over here. So we can kind of expect price to continue to go down, especially now on this 4-hour time frame. We've broken under the 21 SMA. But overall, you got to keep in mind the daily time frame is still pretty bullish. So again, I really wouldn't be too heavy on the sells because overall price is still above this resistance range here, right? So it's kind of like as long as price is still above that resistance range, we could definitely see buys. For example, if the market were to open up and price is trading at support, I would more than likely look to buy it. Now, if I take buys and price continues to go down and I'm wrong on my buys, then I'll just kind of flip sides, wait for that retest rejection, and then look to sell it from there. But as of right now, I'll play this same exact way I normally would play it. Look for buys down here or possibly look for sells up here, especially this area is so strong. I mean, price has rejected this area multiple times already. You go to the daily time frame and you could see how many times the daily time frame has tried to break above this range, but just completely has failed. Keep in mind though, again, if you really want to look for sells and you really want to wait for more confirmation, I would wait for the break of the support range and then look for that retest rejection and then look to sell it back down. Ultimately, where you could look to sell it back down, I feel like the safest area to look to sell it back down to would be probably 33,000. And then anything past that, I would just use previous structure points. Now the NAS. So the NASDAQ price action is a little bit different here. So we've actually had a big rejection towards the upside. And one thing that we got to keep in mind, we have major resistance, major support around this 12,142 area. But then we also have like this other structure point in this range over here, which I wouldn't say it's as major, but it's definitely something to pay attention to here on the NASDAQ, which is going to be 12,000 flats, also that psychological level. Those are you guys that really pay attention to those psychological levels. And remember, this is a rejection candlestick. This is a tested candlestick. And so far, we've seen price go bearish from there. Now, I'm not saying I'm immediately going to be looking for sells, but definitely I would be paying attention to see if selling pressure comes in within these two ranges. And we could definitely look for a possible sell opportunity at these two areas. I mean, if we go down to a lower time frame, essentially we see price continuing to go bullish. Thing is, like, we have this intraday resistance and we have this intraday support here. The NASDAQ to me ultimately doesn't look as clean as either US 30 or even the S&P 500. So it's times like these where market structure doesn't look maybe as clean. I'll probably trade a different indice such as US 30 or even the S&P 500. I was actually paying attention to the S&P 500 today to possibly take a position on, but I was too late already by the time I could have made an entry. Right, so that's kind of when I'll move on and check the other assets to see if there's cleaner setups on those. I'm not really going to like try and force a position on the NASDAQ just because I've taken a bunch of positions on the NASDAQ before. It's not like I'm only going to focus on that one. But at the same time, I'm always going to look for where structure looks kind of the cleanest. And as of right now, I mean, I really just kind of see buys. I mean, on this 4-hour time frame, price is slowly getting weaker and weaker. But again, a lot can happen by the time the market opens up. Market could open up when we're trading at 12,000 and we see a 4-hour candlestick come to this area with a huge rejection to the upside. I'm immediately going to say sells. So again, just take your core price action principles and apply them to the different scenarios that the market's presenting you with. Now, with the S&P 500, so on the daily time frame, we kind of have this resistance range forming here. We could definitely see that price fail to break above this resistance range, which is quite interesting to see because I don't really see anything major throughout like this current structure over here. I mean, you can even argue that you can kind of look at this entire zone over here, but it's not really a zone that I would put like a lot of priority towards. But definitely we have seen the S&P 500 kind of day after day after day reject this area. So I would definitely pay a lot of attention to this area. Let me try and get rid of this real quick. I would definitely pay a lot of attention to this area and kind of wait and see what happens at this point in time. We break it down to a lower time frame, such as the 4-hour time frame, and we have essentially a rejection, and another rejection here yet again. So although this time frame is starting to reject the moving average and it looks like it could continue to go up, I would just be very cautious on buys. I definitely wouldn't buy the S&P 500 inside of this range. That's for sure. I would wait for a breakout of the range and then wait for a retest to see if the range continues to hold as newfound support instead of resistance. That's definitely a safer play on my book. And if we take this down to an intraday time frame, essentially now we have two areas where we could take possible positions from. And I was actually looking at taking shorts along this area here, but I didn't want to hold a position after hours because by this time it was already like 3 o'clock, like 3:30 by the time I was looking at it, and price had already rejected this area, was starting to go down. And I could have possibly taken a position, entering along this range here, looking to target over here, but then I would be holding a trade outside of session. And then when volume is not in my favor, it's kind of like, who knows what can happen to the trade. Me personally, I'd rather wait for price or for the market to open up again, and then you get into another position in this range here. But I mean, it kind of shows you guys that the principles are all the same. I mean, we had essentially a big break to the downside here, where even if you were just trading this hour time frame, you could have waited for the pullback, the retest, which essentially was here, and then gone short there. I mean, I'm not too sure if on the lower time frame you had an opportunity to get in here, which you didn't. Volume just kind of blew straight through, which at that point in time when I was actually looking at the market, it's kind of like I already knew, if price were to start to break under these lows, and most likely price is going to come back down into this intraday support level, which it did, and it never gave me an opportunity to actually go short with this volume, which is why I didn't take a position here. And the only time you should take a position in a situation like this is realistically when you see a retest, because what can happen a lot of times is a fake out where we have a huge weight to the downside and then price just pumps up and continues to trade higher from there. I also thought about taking longs around this area here, but after the first entry signal, which was here, I wanted to wait for a little bit more confirmation, just simply because of all of this bearish volume. I mean, all of this happened very quickly, and this was a situation where I just simply wasn't comfortable just taking a buy position off of the first rejection that I see, because I've seen a lot of times before where it'll give you a rejection, a pullback, kind of like a fake out, almost to trap buyers, and then continue to go down and sell. So my ideology behind this specific position was, okay, well, let's wait and see if price can actually give us a retest, double bottom reject, and then go up, or just break straight through, where I'll then wait for the retest here and then look to continue to sell it, which I never got that. And this is a candlestick where, again, this isn't an entry candlestick. Although I got an initial signal here, I wanted to wait for the retest. And with the way that this candlestick actually printed, I didn't want to take buys, just simply because, again, volume was holding up pretty well from what it looked like from the sell standpoint. So by the time I was really looking at it, I could have probably been down on a 1-minute time frame if it really felt like I wanted to force the position there. But again, I don't want to force a trade, especially when we've already missed out on a pretty big move. This was roughly 1 o'clock, I want to say, if I'm not mistaken. But I mean, the move of the day is essentially this move right here, which I didn't catch. I didn't want to force a position here, nor did I want to take a position along this range here where I could possibly get stuck in some consolidation. So I simply just didn't trade that today. But I mean, there were so many opportunities to make money in the markets looking at it, depending on how you looked at these different opportunities. Again, you could have potentially bought here, made money. You could have potentially sold somewhere along this area and even made money there. But that's just something that I'm personally not comfortable with. And it's not in my trading plan to kind of trade past 4 o'clock in the afternoon. It's just not part of my trading plan. But when it comes down to what we can potentially expect, again, we have a pretty good base as to where we could see price go if price breaks these levels. I mean, we already know if price breaks this support range, we're going to come down to the next support range, which would be 39.10. That's a pretty good area to look for. And if price breaks this resistance range all the way up here, then, we can definitely see price come up into 43 or 40.40. It just really depends on volume and if there's a lot of volume on that specific side coming tomorrow. Now, after that, I really wouldn't be trading with very heavy position size in a range like this, because obviously when price consolidates, decisions are being made as to where price could go. We definitely can see like a pretty steep pullback, kind of looking at the daily here, because it's just one impulse. Price hasn't really pulled back and given us a great opportunity to take advantage of another big impulse to the upside. But again, in a situation like this with like the S&P 500, I would mainly be paying attention to these two levels right here and looking to take trades from these areas. You could have possibly looked for buys here, or you could have looked for sells after the break and retest of this range. But ultimately, price is in a range right now. Anything above the range, we're looking for buys. Anything under the range, we're looking for sells. And if you want to be a little bit more aggressive, you could sell inside of this range, sell here, or potentially buy here. It just really depends on what price action looks like in the morning. Anyways, I'm going to answer a few questions. So let me know who wants to go first.
Bro, quick question for you, bro.
Yeah.
When you're drawing your lines, sometimes you do them at candle close, sometimes you do them at your wicks. What does it really determine?
Honestly, what makes the most sense to me.
What about when you're drawing your daily zone? Sometimes you do lines, sometimes you do the actual zone.
I only do that for like visual representation for you guys to make you guys identify that this is the area I'm looking at. But me personally, when it comes to my trading, I know it's an overall zone. I don't have to have a huge giant box on my screen to really let me know that, hey, we're inside of this zone,
Mm-hmm. Cool. Thank you, man.
Yeah.
Hey, Rahul.
Let's go, bro.
Hey, quick question. So at what point in your trading, do you jump into the 5-minute chart? Is it to measure momentum, or what is it really that you use it for?
It's not really like something that's super systematic. I'm always flipping through every single time frame, and I like to see what's going on every single time frame. Like literally at all times, like every few minutes, I'll be looking at the 5-minute or the 15-minute, and then I'll go to the 30 and just kind of like flip through and see what's going on and what each time frame is trying to tell me. Because again, each time frame is going to give you different types of data. If you're somebody that trades on the higher time frames, you're looking for like these big moves based off the intraday time frame, then you don't really need to be dropping past like a 15-minute time frame. But if you just want to go a little bit more in detail, you can. But realistically, like I'm down on the 5 or the 15-minute when I'm about to make my entry, while I'm like waiting for price to come to my zone, I'll wait for a little bit of a higher time frame, which is like the hour time frame.
I have a question.
Yeah.
What do you think are the best confluences to have when entering a trade?
It really just comes down to like how you trade and what you look for when you're going to take that position. For me personally, I like to be in an area of supply or demand, support or resistance. I like to see the rejections, and typically most of the time I like to be on the same side as the trend or where volume is going, to be a little bit more specific, because there'll be times where you guys could see prices trending bullish here, but current price action for that day, the volume is bearish. And then I'll look to sell with that bearish trend. So I look for volume, I look for the levels that I'm trading at, then I look for my price action signal, which essentially my price action signal is just simply a rejection, a candlestick like this one, and that'll signify me, start looking to buy, go down to a lower time frame, look to buy or look to sell, my bad.
Do you pay attention at all to the 4-hour SMAs at all when looking for direction, or no?
I look for direction based off of market structure. That'll tell me the direction of the overall trend. If we look at market structure here on the 4-hour time frame, we look at market structure here on the daily time frame, it's pretty bullish versus, relying on an indicator, because you're going to be a lot better at trading if you can rely more on what price is telling you versus on an indicator.
Thanks.
Yeah, no problem.
Hey, would you be able to go over GU for me, please?
Again, like it comes down to like your analysis is, to be honest, is probably going to be a lot better than mine. But the principles are the same. So I'll just kind of look for those principles. So on GU on the daily time frame, or this is the 4-hour time frame, on the daily time frame, there's a big rejection to the upside. So that's something to take into consideration. And based off of this daily time frame, like we have a zone like around this area down here. So I'm just going to mark this off to kind of have it to keep in mind that this is going to be a daily range. But you go down to the 4-hour time frame, and essentially you have market structure here. You have resistance along this range here. Now price is actually broken above, made new highs, pulled back to this area. So honestly, as long as price maintains above this area, I would continue to look to buy. Realistically, if it maintains above this entire zone, I would continue to look to buy. Probably back up into the highs over here at 1.2273. If price breaks under this zone down here, I would look to probably sell it back down into the previous structure area, which is going to be 1.16560.
Okay, thank you.
Yeah, nothing too complicated.
Raul,
Yeah, what's good?
hey, what are the signs that a level is strong?
The type of reaction you get from that specific level. I mean, if you see a whole shift in trend and a whole shift in structure from that level, then typically there's going to be a lot of liquidity in that area to even kickstart a move that's like that, versus if you see price kind of come to a level, do this, and then just break right through.
Okay, thank you.
No problem. Any other questions?
Yeah, I have one about structure on the 4-hour time frame.
Sure.
So for structure to break and show directions of going to the other direction, so break of structure, do you look to enter before confirmation? So let's say a break, retest, and confirmation, or do you enter before confirmation?
I mean, everyone's gonna determine confirmation and make an identification on what confirmation is very differently. Like you can just make, I guess, a hypothesis and say that just because price is at a certain point, no matter what the candles look like, that's confirmation to you because you're at a level. Versus I could say like, no, that's not a confirmation for me. Price is just trading around that price range, right? So for me personally, when price gives us a break in structure and a retest such as this one, I mean, confirmation is right when I see rejections off of that specific zone. And I'm starting to see a little bit of consolidation. The momentum slowed down in the opposite direction, in this case, bullish. That's confirmation for me to potentially look to continue to sell off of that break of structure.
Okay, thanks.
Yeah.
Hey Raul, so you said when you're trading indices, you don't like to get in before 9:30, the 9:30 candle, right? Because of the volume.
I mean, I've done it before. And I mean, it's worked out a lot of the time, but then there's been some times where it hasn't worked out, but price goes in my favor anyways. So, I mean, if you're asking me like if you should or you shouldn't, that's something that I feel like it would have to come down to trial and error on your side, you know?
Yeah. Yeah, but typically you like to wait till after 9:30 though, yeah.
Yeah.
Because I feel like it's half and half for me too, so.
Yeah, I mean, if it's happening to you where that 9:30 volatility comes into the market and you're just getting stopped out, then you might as well just wait because, I mean, like, there's so much opportunity throughout the entire trading day. Like, you don't need a trade open to make money. You know, this was the open right up here, and look at how many moves you saw after the open. I mean, you could have caught sells, you could have caught buys, you could have caught sells again, you know?
Yeah, man. Thank you.
Yeah, no problem.
Okay, go ahead. Go ahead.
Raul.
Yeah. What's up, bro?
Is he muted?
I'm not sure.
I don't know. I'll just go ahead with my question.
Sure.
Hold on. In the morning when you trade, is there a time? Let's say I'm a New York trader, and I don't want to trade after a certain time because the volume slows down. What's that time for you?
Probably like 12.
12?
Yeah, 12 and 30.
Okay.
Bro, I took GJ shorts today and got stopped out. If I just break down my position and then you can let me know what you think. Essentially, I started off top-down analysis as always, and on a weekly time frame, we had rejections of that weekly support and resistance, which was at essentially 168. Then on the daily time frame, we were very bearish and we'd broken under my support level, which was at 165, call it 41. And I felt that the previous day had essentially pumped up and rejected that doji candle there. And we were rejecting or previous market structure. So on the 4-hour time frame today, I'd gone down to a 4-hour and I'd seen a rejection. I think it was 10 o'clock my time, so 5 o'clock. Yeah, that one there. I'd seen that rejection. So then I scaled down to like I think my entry was on a 15-minute or a 30-minute. And I essentially saw bullish momentum and I entered exactly where that zone is. My entry was about I think it was 165.20 in the end. My zone was slightly below yours, but I ended up getting stopped out. What do you think? Is that a position? What would you say?
Your entry was right here.
I think it was on the 15-minute. It probably wasn't. On the 15-minute, it probably wasn't the best entry, but I'll tell you what time it was. It was. I saw it as a bearish engulfing, but I don't think it was actually the biggest bearish engulfing. It was around 11:15 my time. So what's that? 6:15 your time? I think
off of the zone.
Well, my zone was 165.41, so it was just under the zone. Yeah. At 6:45 a.m. your time, I think it was on Tuesday. I think it was that one. Yeah, I think it was there. Essentially, which is, that's essentially where I entered. And then my stops were above the previous wick, where you see those 3 dojis to the left slightly, I believe. My stops were essentially 165.65 where my stops was. And then I was targeting like 163.500 or something there. And I ended up getting stopped out, but I wasn't sure if that was, at the time I felt it was a position worth taking, but just for my journal, what would you say based on your confidences for that trade?
I don't really say it was a position worth taking, at least not here. You told me here, like pre-market hours, like right off of this rejection right here, then maybe even this candlestick, like you could have definitely taken a position there. I'd be like, yeah, it's a great position, because you had ample opportunity to move your stops to break even here and cover your risk.
Yeah.
And essentially you sold like around this range here, which looking at a higher time frame, such as an hour time frame, you sold right after a big engulfing candlestick, and we can already see sellers try and push price down here. Now, if you would have told me you would have waited for price to get back into the zone to sell, that would have been a lot better of an analysis, in my opinion, at least just because this is where you're going to see a lot of the main liquidity right here in this range, not really like down here, and especially that price is so close to the zone, it's like you might as well wait for price to come back into the zone here. But then it never really gave you another sell signal like here, or here didn't really give you another sell signal. And then like, let's see if you could have possibly seen a break and retest to sell, because you would wait for price essentially to come back under the zone, retest, reject, and then continue to go down. Let's see, like on a 5-minute time frame, you would have never even got that here as well. So realistically, the only like good spot to have sold from could have been here. I wouldn't have taken sells in the other place, unless if this candlestick maybe looked a little bit like this doji over here, then I would have said, okay, you could probably look for sells here, and then you would have just been wrong. That would have been one of those trades where you could have just taken an L because you were just blatantly wrong. If I just didn't go in your direction, or even if like the setup looked slightly like this, where it was trading a lot higher and it actually came into the zone and rejected, then that would have been also pretty decent position in my opinion here. But I was looking at GJ, and then this was kind of like screaming sells to me, especially once we got to like this range here and price started to break the lows at that time,
Okay. Thank you.
Yeah.
Do you hold trades after New York closes, or do you close them?
No, I'd probably close them before, no matter if I'm in profit or if I'm in loss. Unless like I set myself up for like a big swing, then I would hold them. But most of the time I try and get in and out within the same day.
Raul?
Yeah.
What if a stock had a strong reaction at a level in the past, say twice, but it more recently had weak reactions? Would price still be likely to react again in the same direction?
I would definitely still look for a rejection in that range.
Okay. Thank you.
Hi, Raul.
Yeah.
Just on GJ, right? I took quite an aggressive entry at 166. Yeah, at 166, right at the top. Just yeah, around there, with my stops just above that wick. I was up like 3%, but obviously now I think I'm at break even. Just would you close the trade if you were me right now? Because I'm not really sure how to manage this trade. It looks like I'm gonna get stopped out. So
If you're not sure how to manage the trade, then why'd you get into the trade to begin with?
yeah, because I was up 3%. I didn't take it to break even because I thought we're gonna come back for a lower high into that zone you had, and maybe drop down from there. But
I mean, why did you take this trade? Can you explain that to me?
because on the daily, right? If you zoom out at 166, yeah, at 166, I could see just that area there. So I took a quite aggressive entry there because on the 30-minute time frame. So I thought we're gonna drop down to 162.500 on the 4 hour, and yeah, but yeah, it didn't really go there. So I didn't want to take my stop. I should have maybe taken my stops to break even, maybe when I was up 3%, but I was just waiting for a lower structural high on the 30-minute
You got that.
before.
You look at
Yeah.
it, price went from a high to a low to a lower high to then a low. At any point in time, your stop should have been at minimum above this high. Because if price breaks that high, most likely it's going to continue to go up. And what is it doing right now? It's going up.
Yeah. Okay.
Did you say that exactly how he was saying that 166 entry? That was still a good entry to take though, right? Because it was at like the M30 like supply and demand zone. Well, like the break and retest on your left.
I mean, that's not an entry I personally would have taken because now price is trading back above the major support range versus kind of like this area here. But I mean, if you zoom out, I could see what he's talking about, which is this zone here, which ultimately, yes, that's a different perspective on the market, but that's not personally the perspective that I would have had. This is why I say, like, you got to just prioritize your own trading and your own perspective. Like, you could look at my analysis and what I see in the market and potentially put it into your perspective as well. But like your eyes are going to be more important than mine and what you guys.
Yeah, like the one like what I saw was that you see where it was 166 and you see the rejection on M30 that we just saw right now.
Here.
Yeah, that one. So I saw that, and then I went to M15, and I waited for it to come back up. You see the blue candle right after that rejection? Yeah, so that's where I took myself, and I won. But I was just seeing if that was still a good place to have that entry, because what I did with my analysis was I did it on the hour and then 30, since that was like a place where I had consolidation and it was a break and retest zone.
You tell me you saw resistance here. You went to a 30-minute time frame, saw this, went to 15.
15. Yeah, exactly after that.
I said it's perfectly fine. Just me personally, I wouldn't have seen it this way. I would have seen, okay, price is now back above support. You know, I'll wait and see what happens. If I'm looking to sell overall, then I'm gonna wait for price to break back.
Yeah, that's exactly what I have too. But then I was thinking like as like an intraday like level. I was like, I saw that on the left that it had that previous support and resistance, and it was rejecting it for a while back then, and the support was pretty strong too. So I was assuming that, well, not assuming, like predicting that that was a nice level to take a position too. I was just seeing if like that's a nice place, if that was like still correct in a sense.
Yeah.
Okay, perfect. Thank you.
So, Raul,
It's good.
could you break down the concept of like keeping your chart simple and like what exactly that means and maybe what it looks like as well?
Well, I mean, I feel like everyone's gonna have a different perspective of what keeping your charts simple may mean. I mean, I feel like my charts is pretty simple, but to other people, you know, they may see it as messy. Ultimately, it comes down to just your workspace. I mean, if you go to your office and you have fucking McDonald's wrappers all over the place and you have cans here and paper that's everywhere, I'll say your office looks like shit. You know, ultimately, I would just kind of have my zones marked off in the areas that I'm looking at of importance marked off and kept on the charts, not have just random things everywhere. Like each one of these lines tells me specific information that I need to know when price gets to that area, and that's kind of what's important. I don't need to have anything that's more than that or left over, from any past markups. If that makes sense.
So do you feel like using rectangles kind of throw it off, or because I see you don't really use rectangles like zones at all, you just use straight lines?
I try and just use horizontal lines.
Appreciate it.
Yo, Raul,
Yeah.
can you go over gold again?
Basically what I said is you could definitely expect to pull back down to 1758, where you could look to buy from there. Anything under 1758, then you could look to sell it back down to 1740.
Okay, thank you.
Yeah.
Can you do
Another
a
question.
breakdown for us for UJ?
Say it again.
Can you do a breakdown for us on UJ, please?
Again, like I would keep the same concept. If you trade UJ, your markup is probably gonna be more accurate than mine. The one thing that I will tell you is, price has been in a bearish or in a bullish trend for a very long time, and now we've seen a huge bearish move off of you have this structure point that I would definitely pay attention to, break it down to a lower time frame. The daily time frame is consolidating around this range. We've broken under these daily lows, so price overall right now just made a lower low. But at this point in time, I definitely wouldn't continue to look to sell UJ, because again, we want to wait for a form of a pullback before looking to go short. And then, you have to ask yourself, well, where could we possibly pull back to look to go short? And definitely the first area would be this range right here, because it's previous support. We want to see previous support hold as resistance. So in a situation like this, I would wait for a pullback to our previous support range to hold as newfound resistance, then look to sell it back down to here. If price does that, then great. We can, look for price to come back up to here, look for that rejection, sell it down to here. If it breaks through, then you can look for another trade where we look for price to continue to go lower, pull back, retest this area, then look for it to continue to go down after that. If price breaks above this area, then, you can look for this area up here, which is also kind of like incongruence with this other area right here.
So I should really avoid looking for buys, more sells, in your opinion?
You could look for buys, but personally, I'm just not comfortable fighting this momentum. That's just up to me, if you want to look for buys, you can. You just have to ask yourself, where could you possibly buy? Where's your stop loss? Where's your target?
Okay, thanks.
Yeah.
Hey, Raul. Sorry, I missed your GJ analysis. Is it okay if you could quickly recap where you see GJ going? Or
if price is trading above this zone, I'll look for price to come up to here. If price is trading under the zone, we'll look for price to come down.
Yep. Would you be wary because of the way the daily closed with that wick to the upside?
For buys, I would continue to look for sells overall. It's Asian session. By the time the London session opens up, this could be a bearish engulfing candlestick and price would close under, so I would continue to look to sell overall, but it's kind of very simple. If price maintains above support, then we're most likely going to come up into the next support being right here. And then we'll see what happens from there.
Cool. Thanks.
Raul, the person you got calling out GJ at nights, do they follow this trading strategy as well, or do they their own thing?
I'll say he kind of more does his own thing. He trades breakouts.
Would you ever consider letting him host something as well? Because he hits some pretty good, like 1 to 7 RRs consistently.
Yeah, he does, but then the problem comes with the losing streak. Since he only uses a maximum of 10 pips, he'll lose maybe like 6 trades in a row, but then make them back very quickly. So you have to ask yourself if you can like mentally maintain losing all those trades in a row, like 5, 6 trades in a row, where maybe you'll lose like 3 in a row, win 1 out of 1 to 1, 1 to 2, then lose another 3 or 4 in a row. That's why I don't really trade like him or have him come onto here and do any of his own stuff. But he's going to have, his own community and everything else coming soon. But we find a lot of the times is that like by the time he calls a trade out, I've already been in the position and I've been in profit. So it's pros and cons of both different trading strategies.
Thank you, man.
Yeah. But definitely, if you want to learn more information about him, bro, I just follow him on Instagram.
Yo, Raul.
Yeah.
Are you mainly looking at the 4-hour trend? Because I've noticed sometimes you'll say, "Oh, we'll buy above support if price is above support, and we'll sell if price is below support." But sometimes, like it confuses me because it doesn't really go with the daily trend, but it goes with the 4-hour trend.
Yeah. I mean, again, like each time frame is going to have its own trend, and you need to know where you are on that specific time frame's trend, so then you could capitalize off of as many moves as you can while maintaining an edge in the market. You know, me personally, like I
Okay.
said, I'm trading an intraday time frame, and although that the S&P 500 overall is in a bullish trend, I would have had no problem taking sells from here to here. You know, I'm not looking for an entire shift in trend or a continuation in the trend, which I mean, it's going to be almost impossible to catch the entire trend. You know, I'm just looking for a small piece in the market to satisfy my risk to reward. That's it.
What
Okay.
does intraday mean?
Say it again.
What does intraday mean?
Intraday is basically from the beginning to the end of the day.
Okay, thanks.
Yeah.
You see when you say that you would want price to come below on GJ, the zone that you marked out, ideally, would you want 4-hour closures below or a daily closure back below? What would make? What do you normally? When would you start looking for sell entries? Would it be because sometimes it could be like a
By the time I
30
look
minute.
for a daily closure, the move has already happened for me. If you're swing trading, it's going to be a completely different like ideology. Maybe that might just be your entry signal. But when I mean when wait for price to come below, it's price. Price right now is above. It's at 166, 110, let's call it. I'm waiting for price to be at 165. I don't know what the price this is. 165, 250. That's what I mean by wait for price to come below. But by then, by the time price is coming below, you know, especially here, we'll have pretty decent sell signals on either the hour or the 30-minute, you know?
Yep.
So you'd wait for price to come below and then pull back into your zone to look for an entry?
Yeah, for sure, because I want to make sure price maintains that sell position. Like kind of like what happened along this range here. Price came up, closed under, came back up. I wouldn't really say price came back into the zone, but definitely it rejected the zone here. I mean, just for the sake purpose of this video or of this webinar, you can look for the rejection here, wait that this previous support is held as resistance, and it continued to go down right after that. It just never broke under this area here and then just went up from there.
So where would you target? Because I see 163, 500, but that's because of the consolidation. It's kind of more tricky.
Say it again.
Where would you target in this case? Because I see like 163, sort of 600 as targets, but then because of the consolidation, it's kind of tricky to figure out where to target in this case. I don't know if you would just trail your stops and be very mindful that price isn't really the cleanest right now.
In a situation like this, I mean, I would continue to attempt to target the lows.
Yeah.
Anywhere in between, I'll move my stops to break even. Like, for example, in a situation like this where price came down, formed a low, and started to reject this support on the 15-minute time frame, that could possibly be a sign for me to call it quits, because I know if I'm trailing my stops based off of this market structure, if price were to reject here, the next area is to come to here. If price breaks under that, it'll come to here and then here. So
Yeah.
we have multiple areas where we could possibly see either a reversal or some form of a pullback. And then from there, it's up to me to make that decision. Like, you know what, am I going to close or am I going to hold?
Okay.
But then at the same time, you got to keep in mind, like, if you have an entry here and stops up here, like, I don't know if I would have taken my entire position off here. Maybe may have taken a portion of the position off, or at minimum move my stops to break even. Because at this point, it looks like I'm up roughly a 1-to-1. And
Yeah.
you gotta remember, like, capital preservation is the most important thing. Worst case scenario, you get stopped at break even, you'll get back in later on.
Okay, great, thank you.
Yeah.
Do you think it's better sticking to a few pairs and only trading them, or trading every single pair that just has a good setup?
Few pairs.
What would you say, 3 the most?
Yeah, I mean, for me personally, it's basically the futures market. It's S&P, NAS, and the US 30. So I would
because
if you trade gold.
Because I trade.
If you trade Forex, I would stick to Forex. I wouldn't be trading like US 30, gold, and then this. Like, I would just focus on like the certain asset group that you're trading. Again, if you're going to trade commodities, become a commodities trader. If you're going to be a Forex trader, become a Forex trader. If you're going to be an indices trader, become an indices trader. Don't be jumping around and being average at trading, you know, one certain asset group versus being amazing at trading just one asset group?
Because I only trade Forex, but I have in the morning I go through like 15 charts and just look for a setup. Do you think I should just find like 3 of my favorites and only stick to those, or just keep doing what I'm doing?
Personally, I mean, it depends. What time frames you normally trading?
Between the 5-minute and the 15-minute, those are my entries.
I would pick your 3 favorite and only trade those 3 favorites, because on a 5 or 15-minute time frame, throughout the span of a single one in Forex, you could trade basically the London to the London New York crossover. You have so many different opportunities to take a position, you know. So I would just focus on probably not even 3. I'd probably just focus on 2.
Would you say gold? Like, can you mix gold and like forex? Because sometimes I'll trade like GJ, and sometimes I'll trade gold. But I don't trade gold really a lot. It's mostly just like 90% forward.
You could, but then it just adds a different aspect on your edge, because if you become good at understanding commodities and how certain news events affect commodities, or what's going on in the world affects the commodity, then you're a good commodities trader. And maybe when you like veer off of trading commodities, you're like, you know what, I'm going to trade GJ because I see a nice setup, and you take a loss, you just killed or lost X amount of dollars for practically no reason when you could have just waited for your commodity setup.
Yeah, because that's what I see sometimes. Is like I'll see a setup on like a commodity like gold, right? But then I mostly trade forex, and I don't take the trade that I usually would because I was looking at gold.
I would just pick one asset class and focus on that asset class. That's kind of that's what I realized, you know, over the last few years is best to do. Again, like if you're gonna be a race car driver, just focus on race car driving the entire time. Don't also like put a bunch of effort and energy into like baseball or soccer. You know what I mean? You're gonna be at all 3 versus being really good at racing cars.
Got you. Thanks, dude.
Kind of fun.
And how do I pick the 3 pairs? Do I just go off my results, or are there like pairs during the New York that just move the best?
You got to look at what pairs move the most during the session you trade, go through that entire watch list and see how well you could read market structure on the majority of the time frames on that pair.
Hey, Raul, what's the best time to trade gold?
You could trade it either in the London or the New York session. I would say the New York session, or the London to New York crossover, because I mean you're gonna have both sessions basically in one.
Okay, so that the London to New York crossover, that would be like what, like 10 o'clock, 10 a.m.
It's the New York session. No, it's not 10 a.m. It's 8 a.m.
8 a.m. Okay.
Hey, Rob.